What's up, everybody? Welcome back to my channel. Thank you for joining me today. Today we're going to be talking about Ethereum's upcoming upgrades and why some people are comparing them to 3 Bitcoin halvings, as well as Polygon partnering with the blockchain infrastructure provider Alchemy. And we're also going to be taking a look at the Bitcoin and Ethereum prices. But before we get into any of that, if at any point you enjoy this video, please consider hitting the like, hitting subscribe, and turning on my post notifications. It really helps this channel out. You know, I'm a small channel, so any amount of support I get goes a long way. I've noticed I've gained like 4 or 5 new subscribers in the last few days, so shout out to all of you guys. I appreciate the support, for real. Alright, now let's get into this video. So there's not much, too exciting going on with the price action right now. I just have Bitcoin's daily pulled up right now. We do have a green dot appearing right here on the daily. Now I don't expect to pump up too high from that green dot because we have just broken out of this rising wedge and we're coming up to test resistance right here. So I would probably expect a rejection here. Bitcoin also, unlike Ethereum, has been putting in lower lows inside of this range, while if you go over to Ethereum's chart, Ethereum has been putting in constant higher highs. So it's possible that Ethereum can get dragged down in the short term from what Bitcoin is doing, but I mean, it does kind of seem to be doing its own thing right now. We are kind of coming up to the end of this range for Ethereum, so we will have to see what happens when we get there. Okay, and jumping back over to Bitcoin, on the 12-hour chart, I want to point out the money flow here. Now, since we started this capitulation, the money flow has been in the negative, and on the daily it does not seem to be turning back over just yet, but here on the 12-hour you can see we kind of have a nice little curvature here, and it looks like it possibly wants to cross back over into the positive here soon. We've also got a very clear direction on the momentum waves. The money flow is building up. Anchor wave, trigger wave, trigger wave, trigger wave. So the 12-hour is actually looking kind of bullish for Bitcoin, and if you look at the candle here, DBSI numbers are 16 on the bull side, and is that a -5 or yeah, -5 on the bear side, which is good to see. Now, like I said, I would expect a rejection off of these resistance levels here, off the trend line for the wedge that we were trading in, and this support resistance level at 35,000. But maybe these bullish signals can help to push us up through those, which I would not be opposed to. Alright, now moving on to some of the news stories. I brought this one up because, well, I personally am extremely excited for the upcoming Ethereum upgrades, and I'm just going to be going over why some people are calling this the triple halving for Ethereum. The upcoming London hard fork is a critical milestone in the Ethereum roadmap leading up to the release of ETH 2.0. It will change the protocol's consensus algorithm from proof of work to proof of stake and restructure the monetary policy. Currently, transaction fees are calculated by the concept of first price auction. Market participants bid a set price for miners to process their transactions, and the highest bidder wins. However, this is set to change with EIP 1559. The network upgrade will introduce a base fee for transactions to be included in a block. Users who wish to prioritize their transactions will have the option to add a tip or priority fee to incentivize miners for including their transactions in the next block. The higher the tip, the bigger the chances for the transaction to be processed. EIP 1559 does not directly intend to make gas cheaper. The base fee will fluctuate by up to 12.5% after blocks are more than 50% full, which makes transaction fees predictable and transparent to prevent users from overpaying for gas. Among other changes that result from the EIP 1559 upgrade, the most notable one is that 70% of transaction fees on the Ethereum network will be burned, meaning that this supply will be deleted from circulation. The remaining 30% will be delivered to stakers as an additional staking reward in addition to their regular issuance. The significant drop in Ether supply is key to drive Ethereum's price since it makes it a deflationary asset. Given the significance of the upcoming protocol upgrade, the concept of Ethereum triple halving that started as an analogy on crypto Twitter has evolved into an analysis of financial flows to predict what will happen to the price of Ethereum by January 2023. And looking at this tweet thread right here, Justin Drake says the net annual buy pressure of proof of stake in EIP 1559 relative to today is greater than the deposit contract and Grayscale holdings combined. And then Squish Chaos says net annual buy pressure doesn't make the point. In a halving event, BTC miner sell pressure drops 50%. It causes all hell to break loose. What will this look like for ETH? And then a follow-up to that, post-merge, ETH sell pressure will drop 90%. For BTC sell pressure to reduce this much, it takes 3 halving events. I'll repeat, ETH will undergo the equivalent of 3 halving events in the next 12 months. And so this is what leads people to call these upcoming upgrades the Ethereum triple halving, because if all goes well, Ethereum sell pressure will drop 90%. Now, this is, I'm assuming, also taking into account the transition to proof of stake, which, as of right now, is expected to be released by the end of 2021, so November, December, possibly early 2022, because I know that Ethereum likes to delay stuff. We're already getting EIP 1559 delayed another 2 weeks. That's alright. I've waited this long. I can wait a little bit longer. But this part right here is what I feel a lot of people don't actually realize, is how much of an effect this should actually have on Ethereum's tokenomics, on its sell pressure, and on its price. It's all very, very interesting stuff. Ethereum's triple halving has its roots in the reduction in supply. Following a successful upgrade to EIP 1559, a drop in sell pressure is expected. Analysts believe that a 30% reduction of circulating Ether could take place, which is about half the effect of a single Bitcoin halving. Meanwhile, the transaction to proof of stake might result in a supply shock that is equivalent to 2 halvings. So EIP 1559 could cause a drop in sell pressure and could lead to a 30% reduction in circulating Ether, and the transition to proof of stake is equivalent to 2 halvings. So according to this article, the transition to proof of stake is equivalent to 4 times the supply shock of EIP 1559. The much-awaited London hard fork was expected to go live this month, but after a delay, Ethereum core developer Tim Biko proposed August 4th as a potential launch date. Other core developers will make a final decision on July 9th. So as of right now, August 4th is the date they're looking at, and we will know for sure on July 9th if that is the case. So for all of my Ethereum holders out there, this should get you extremely excited. I know it has me extremely excited. I am personally ready for the Ethereum triple halving, and I'm excited to see what kind of effect it's going to have on the price. And moving on to the final news story, Alchemy adds Polygon support for faster development on Ethereum's leading Layer 2. Developers building on Polygon now have the Alchemy's toolkit at their disposal. Alchemy, which has been described as the Amazon Web Service of the blockchain world, is an infrastructure provider that helps developers build decentralized apps on Ethereum and other networks. Polygon has attracted a number of leading projects in recent months, including decentralized finance platforms, Aave, Kyber Network, and others. Alchemy is moving quickly to expand to multiple Layer 2s, first Arbitrum in May, Optimism in June, and now Polygon, its biggest partnership yet. The developer has also partnered with Dapper Labs Flow and Crypto.com's Crypto.org as a part of its greater plan to become multi-chain. Alchemy's Polygon tie-up is symbiotic, Garland said. Alchemy's developers gain access to Polygon, and teams building on Polygon gain access to Alchemy's developer platform. Along with its infrastructure and developer tools, it's a combo meant to fuel ecosystem growth. So this is obviously great news if you are a Polygon holder. This sounds like an announcement that could lead to more utility, more function for Polygon in the future. And with all this hype around Ethereum and DeFi, I feel like Layer 2s are going to be performing pretty well in the coming months, so long as Ethereum does. We may just see the DeFi summer after all. Or maybe it will continue to be delayed. I'm okay with a DeFi fall, but it's looking like we could get a DeFi summer. Alright guys, this was all some interesting news. Let me know what you guys thought of all of this in the comments. Feel free. It helps the algorithm. If you got any questions, I can answer them for you. It's a win-win. And yeah guys, that pretty much does it for this video. If you enjoyed, please consider hitting the like, hitting subscribe, and turning on my post notifications. I really appreciate all the support I've been getting. And I will see you all tomorrow for my next video. Peace out.